Welcome back. We just heard our closing bells ring on the day. As we take a look at where we finished the day, we're at 63.39 on the S&P. That's down about 0.4%. The Nasdaq down about 0.5% at 23,218.12. The Dow trading down 0.75% on the day at 44,130.98, and the Russell 2000 closing out the day about 1% down at 2211.65. Now it is time for us to take a look at earnings. We're going to bring in our closing panel. We've got Alex Coffey joining me in studio here, our senior equities contributor and host of Next Gen Investing, and Scott Durfee, our senior manager of trading services over at Charles Schwab. Now we are waiting on Amazon, we are waiting on Reddit, and we are waiting on MicroStrategy. As we wait for these earnings, of course, let's talk Amazon. Alex, big expectations here. What do you think the primary focus is going to be on for Amazon?
Yeah, it'll be two-pronged. It'll be, of course, the AWS numbers that'll get a lot of play, but then also the e-commerce side of the business matters. So it's always those two things, and it looks like the numbers are starting to come in. All right, let's take a look here. We are going with EPS of $1.68, which well outperforms the estimate for $1.33. They have got net sales of $167.7 billion, which bests the $162.15 billion that the street was looking for. Operating income at $19.17 billion, higher than the 17. Let's look at AWS net sales. That's a big number that people are looking for, up 17%. Operating margins up as well, 11.4 from 10.4%. Their second quarter operating income at 19.17 versus 17. Guidance also coming in saying they're seeing a favorable impact from currency. That's going to be the weakened dollar there. And their third quarter operating income expected to be between $15.5 billion and $20.5 billion, which the week is going to be on the lower end of the range because they were looking for $19.42 billion. So beats on the top and bottom line, but maybe some issues here with guidance. Street's okay so far. Alex, takeaways just as we're first getting the number. Yeah, first thing that I'm seeing is that the e-commerce side, or let's just say the retail side of their business, really strong. It's almost entirely the I guess contributing factor to this beat, especially when you look at operating income. The cloud numbers, especially after the Azure numbers that we got yesterday from Microsoft, I will be surprised if this is enough to excite analysts, just simply because Azure was really strong. You saw a move higher in Amazon shares today, kind of in sympathy with that. And they come in line. So not disappointing, but disappointing to what I think the whisper numbers started to be throughout today.
And I want to give our viewers those numbers. The AWS net sales coming in at $30.87 billion. The estimated was for $30.77. So in line, small beat, but maybe not enough. As far as those net sales, you mentioned their physical retail sales, $100.07 billion, well above the estimates for 97.36. Scott, I want to bring you into the conversation here too as well. A strong second quarter in terms of the numbers, but is it going to be enough?
I'm with Alex. I don't think 17% growth on AWS is really going to be enough. We were expecting, it's not that far away from expectations. It's right in there. But, in today's world, you got to beat expectations in order for really investors and traders to get super excited about this. I think the question for Amazon now is whether it can turn its AI and satellite bets into monetization returns, right? Without actually crimping near-term margins too heavily. We know AWS, but we have all the other things too that they're doing. We've got to kind of spread that out and take a look at it more holistically. I don't think 17% AWS growth is going to be enough.
Well, it is interesting because there was just a huge spotlight on that, and that pace does outpace the rest of Amazon's performance in terms of that 17% growth that was expected, came in right in line. It is outpacing the rest of Amazon, but I think because they're coming off of such a dazzling quarter last quarter, the street had really high expectations here, Alex.
Yeah, I think another way to say it, which I agree with, so hopefully this comes off that way, is in comparison to Microsoft, I think now Microsoft just looks a lot better. This was sort of the story going into yesterday, even with Microsoft and Amazon before yesterday, was kind of this idea that cloud was going to maybe slow down a little bit or just kind of level off. So I think after we get, and that's why you got such a huge move in Microsoft too, is it really was like kind of like a, oh wow. And this isn't that. And it's not bad. It's not to say that they aren't, one of the most successful companies on the planet. They clearly are. But when one of your key competitors is growing their cloud business faster, and they're kind of faster growing things, growing at almost 40%, almost double the rate that you're growing, it's a little bit concerning. The thing that's really kind of head scratching to me, and this is where market commentary or their conference call commentary from company leadership maybe will shed a little bit more light in context. But it looks like their third quarter operating income, if you just went off the midpoint versus the midpoint of their range, the midpoint estimate versus midpoint of the range, misses by about $2 billion. But that's almost exactly the margin that they beat second quarter operating income on. So I know with some of these accounting, sometimes it's a matter of did they shift something forward or backwards that's kind of influencing that. I don't see full year numbers, and that would be a place that it would show up if they adjust down or leave those the same. So it may be as simple as, hey, one of these expenses that was supposed to take place in this quarter got pushed out to next, and that could be the contributing factor there. But really impressive quarter, huge beat on EPS, $1.68 versus the estimate of $1.33. So you look at this, it's not disappointing. It's just kind of disappointing relative to what we heard from Microsoft.
Well, and we've got Strategy out now, so I do want to jump away for a second and take a look at Strategy, formerly trading as MicroStrategy. As we're looking at this, their second quarter revenue coming in at $114.5 million. That was above the estimated $112.8 million. And they're giving their guidance here as well for their second quarter. As I'm scrolling up here to get back, we've had this earnings come out here. And as they're taking a look, they are posting that beat here. They're also buying a great deal of Bitcoin. They're announcing a lot of stuff about this, estimating net proceeds of this buyback that they're planning to buy back $2.5 billion. As we're getting these numbers in here, that revenue on the beat, their net income coming in at $9.97 billion. They did have a loss of $102.6 million year over year. So, it is an improvement for them. I don't think it shreds his thesis. They're seeing their income, their full year income here coming in at $34 billion, full year net income at $24 billion, cash and cash equivalents at, this is low, $50.1 million. The estimated was supposed to be $1.11 billion. So the street likely going to have an issue with that. As I'm pulling up their chart right now to see how everyone's responding, they are responding positively. We're up about almost 2% right now on this notes from Strategy here. Takeaways from you, Alex, just as we're, sort of digesting these numbers. Is it all, tied to that net income number?
I look at this as it's really hard to react to this just because it's like 99.9% tied to the price of Bitcoin, and they're doing it in a leveraged fashion. So one thing that I think is interesting is within their sort of full year guidance, they base this on $150,000 Bitcoin. So it goes to show kind of their optimistic look for it. But with a company that's essentially generating no revenue anymore, it's totally a Bitcoin treasury company. They're doing so levered now. The big question is how much do you want to pay for that leverage access to Bitcoin? Not a huge move, not surprising. I mean, we're talking about a $400 stock that's up $7, so nothing alarming here. But again, if Bitcoin was down 5%, stock's probably down 5-10%. It's that simple, I think, when it comes to MicroStrategy right now.
And Scott, as far as this cash and cash equivalents number, coming in at $50.1 million, the estimate for $1.11 billion, how significant do you think that's going to be? As we're seeing the street respond positively, like Alex said, really tied to the price of Bitcoin, and Bitcoin performing well today.
Yeah, it is, and as Bitcoin goes, so will Strategy. Alex said it, and it's actually the direct correlation is almost uncanny. However, we're seeing some stuff come through. If we can just see a couple of things happen for Strategy in terms of their subscription service and these types of things, even though it's a small drop in the bucket compared to the valuation of the company, we can see, and they do have room for growth in these areas. I'm looking for growth in those areas. I'm looking for maybe a broader diversification across software type of platforms. But at the end of the day, we are a Bitcoin proxy with Mstr.
All right, and we have Reddit out as well, too. Just came out. Daily active users, that big number, or daily active uniques, I think as Reddit refers to them, up 21% year over year to 110.4 million. Revenue up 78% year over year to 500 million. Their gross margins expanded 90.8% year over year. Adjusted EBITDA coming in at 167 million. That's 33% of their revenue. Operating cash flow at $111 million here. And as I'm scrolling down to get you the rest of these numbers, their ad revenue up 84% year over year to $465 million. You know, highlighting quite a bit here, but as they report in their GAAP gross margin, so I want to make sure that we have all these numbers with adjusted diluted here for us. Revenue in the total revenue $500 million for for this quarter. U.S. $409 million of that. International $91 million. You know, Alex, as you're looking at this, those user numbers, those were the big ticket item. That's what everybody wanted to see. Are the user numbers high enough?
Well, they are when they're adjusted their average revenue per user is a huge beat. So their average revenue per user for the second quarter comes in at $4.53. The street expectation was $3.88. So while the user, daily active users or uniques or whatever terminology you want to use is a small beat, the fact that they're, you know, I guess squeezing almost, what is that, almost 20% more than the expectation. Let's call it 15% more than the expectation per user. I mean, this is a really, really good story for Reddit. So numbers for users, pretty steady. But the revenue per user, just a huge beat, and it looks like they think that's going to continue because they guided really nice too. Well,
and they've just got a monster EPS beat here as well too. You know, they're at 48 cents per share, coming in, you know, 156% higher, a 900% increase year over year. You know, quarterly sales at 499.6 million. That also beat the consensus estimate. But everyone looking for those daily active uniques and the cost per unique, the revenue per unique. You know, Scott, what are your takeaways here? Reddit was, you know, being watched carefully to see how the algorithm was going to be affecting how many users they were seeing. And it looks like they're seeing enough and their ads are doing fine.
Yeah, apparently so. I've heard you guys and many, many others talking about the algorithms on Reddit and how that might come into play here today. And indeed it has, but it has in a way that has been positive. Apparently, you know, when we see these kinds of earnings per share revenue type of swings, Marley, this is a big move for Reddit. You know, I love the price action, that's fine. But when I see this kind of profitability swing in a company like Reddit, as we are now seeing in their earnings per share, this is positive. This is positive news for Reddit. They are positioned this quarter to have to continue on. We'll see what they say in the call. I'm always anxious to hear about guidance from everybody, but especially when we have companies that are so closely integrated together, as is Reddit with the algorithms, as you were just mentioning. So we'll see how the guidance goes, but so far it looks really great.
And I want to jump back over to Amazon. You know, they're sort of our big ticket focus right now, you know, with the most potential to move. They are down about 2% right now, which is not really a significant move considering the size of this company. You know, they do have robust sales growth and they do seem to be shrugging off tariffs. But Alex, was that sort of expected and built in because the tariff impact likely won't be seen until this current quarter?
Yeah, we'll see how it shapes up when we get more context from the company's leadership during the call. But what I would say is if you took Meta and Microsoft out of the trading action today was a pretty red day overall. Amazon was a little bit higher, all things considered. If you take this kind of post-market trade out, post-earnings, it'd basically been as if Amazon was unchanged on the day. I think there was a little bit of a front running of this trade today post-Microsoft thinking Amazon was going to have strong numbers, particularly in cloud. Now, the numbers came out pretty strong for the retail side, but the cloud numbers were largely in line. So I would call this as kind of an inline report, slightly better than expected in some areas, kind of disappointing in others. But in the context of this market where if it's not perfect, it's not being rewarded, maybe an unchanged, a slightly lower response is a win for Amazon investors.
Absolutely. You know, Scott, takeaways, you know, from Amazon, from what you're seeing, you know, down about 2.5% right now. Not as big a move maybe as many expected on Amazon.
Yeah, you're absolutely right. But you know, maybe in line with what others thought as well too, right? You know, we know for sure that Amazon is spending huge dollars on CapEx this year, and we're going to see. I want to hear what they have to say, or if they even address it in the call. But you know, over $100 billion this year, and I want to know where that's going. Is it going to AI infrastructure for AWS? Is it going to the satellite internet project? Is it going, or what? And I think investors are also going to want to know this, because this is going to be an important component to the guidance of the company going forward.
Well, thank you both for being with us. Of course, Alex Coffey, you'll be back with us as we do more earnings. Scott Durfee, thank you so much this afternoon.